Good morning, everyone, and welcome. Before we start, we have a disclosure. Please be aware of risk in the future trading. All our videos are for educational purpose only. You're very welcome to follow any of our automated signal as long as you are on a sim. We strongly recommend to stay on a sim as long as needed before you start using a real money. Today we have a new update on the TI7, and we will be releasing the new TI7 for NinjaTrader 8 on Monday. And I'm showing you the newer version. I'm using ticks on the NASDAQ, and I'm using 1 minute on the ES on the right upper corner, right corner here. For the ones that just joined us, we have many different type of an auto trade which we will be sharing with you. But before we do that, I want to mention there is 2, 3. We have in your package like around 10 auto trades. I mean, our system is very big. Different auto trades for different purpose. The blue chart here is a precision automated trade, is a brand new one. We released it last Monday. And no, I'm sorry, not yesterday, but the week before. And we are using the precision auto trade. The ones in the blue charts is a total different type of an auto trade than the one in here. Those are connected to the signal automated trade, and the white charts is the TI7 for NinjaTrader 8. I mean, we cannot cover all the auto trades in here, and I like the precision auto trade. And this one here started around 9:30. You can see where we turn on around 9:30, and the NASDAQ was done 1,000 within seconds. It was done. Also, the NASDAQ for the 3 minutes also started, and it was done at 1400. So one of them did go long and the other one did go short, and it was done. But what I like about the 10 seconds is when the market is, let me take this one out. It is done. Beautiful. Gorgeous chart, really, I love it. Anyway, what I like about the 10-second, if you know how, or you know how to, okay, this is a beautiful trade on the NASDAQ, the tick chart. This is beautiful, and you can see the first trade was 925. The first trade, and now we still have 3 trades on the NASDAQ, and I'm using the 520 ticks to clean some of this noises in the market, and I will cover that on Monday. We will share the setting with everyone. But so here is the situation is before we start covering the signal and the 1 minute signal. Right now we have 317 ticks based on one contract's entry. You don't have to trade all of them. ES, NASDAQ, Dow Jones should be good enough. And the 15 second, we have 422 ticks into the profit based on one contract. This is, and now if we look at the market analyzer, we had the entry at 223, target 42.15. On one contract is 35 ticks. On 2 contracts is 70 ticks, of course. It's double the amount. Here is 437. Here is 700. So the market analyzer is based on one contract, folks. So, and for the right upper corner on the market analyzer, this is the right upper corner. This is the NASDAQ, and This is a base on a 15-second, if you see that, and it is. We had an entry at 738.25. One target is 78 ticks. Two targets on the charts I'm using on the Autotrade too. It is 740. Based on one contract is 425, and now it is almost $800 on that trade. So we are doing fine. Everything is on the cruise. We put this TI7 in a different shape, and we will be releasing the new TI7 on Monday, and with the also the precision automated trade. There we go. Beautiful trade. Excellent trade on the NASDAQ. One trade. The first trade started around 944. And right now we have one still in the trade somehow. And we are going to close it. There we go. It seems like there is one. Okay. And I think it is connected to another chart as well. I will find out. But it is 248. It's done on this one here. And the first trade here on the 10-second, it is 912 on the first trade. So the target is 1,000, and we don't need the... Now closed. So what we are going to do, it is beautiful entry, and it is done, out of the way. On the 10-second ES, we nailed 912, and the daily target is 1,000. Do we need to really continue trading? No. You just stop and leave this last $80 without risking anything, or risking what you have took for today. And if I was you, I would leave it alone. I would not keep going with it. And let's see also the TI7 1 minute. Gorgeous trade, beautiful entry, and this one here nailed 1250, and the first trade was a little after 9:30, and it was done. I'm not gonna mess with it. I'm gonna leave it alone. The market did go wild. If we look when the market's open, let me take this one away. The market really went all the way up, dropped, and then kept going down. That's fine. You need to wear a seatbelt when the market started today at 9:30. Really amazing. Okay. And even the CL is going proper direction. That's very good on the CL. So, okay, so let's go ahead and examine what's going on in the market. And, okay. The first things what you need to do when you start your Ninja Trader in the morning, before you start using any auto trade, you gotta make sure that the ES, NASDAQ, Dow Jones are on the same direction. If you don't do that, you're gonna get in trouble. I mean, this is a really basic. I'm not trying to put you in a room to train you how to trade for the next 20 years. No, but there is some basic you need to learn to make sure that market is in sequence before you start using any automated trade. And once the market, as you see here, is in sequence, and then we can look at the chart for 5 minutes to make sure that the ES is not stuck between support and resistance. And then if you see this market is not getting stuck in any support resistance level, you turn on your auto trade. If you do that on the first 5 minutes, 10 minutes, I don't care, that can avoid a losing trade. Sometimes it's not pleasant if you start your auto trade and the first trade is a losing trade. I don't like it. It can really ruin your day. So it is very important the first day, the first trade, when you start your auto trade, to be a winner trade. So it is very important because it's going to have an impact on you. Let's say you take the first trade. The first trade can go, like what you have seen, can go $900, $800, $100, $400, doesn't matter. But that can beef up your account in case if this market start going brutal back and forth, and like a tango dance, couple of step forward, couple of step backward, and that gonna have an impact on your next trade. So it is really important the first trade to be a winner trade. So in other words, I will not turn on the auto trade with my eyes closed in the morning. You look at any technical chart you have or any auto trade you have from any company, doesn't matter. And whatever indicators you have on your charts, if you're not our member, and then you can monitor those movement in the market. As we see here, the market is trending, and on a trending market, you don't have to do anything to the auto trade. And this is the first trade on that chart is 1 minute ES, and it is a lovely, perfect entry, breaking even, relaxing. There is no, even if we are taking any kind of chart, it doesn't have to be the 1 minute. Even if you are, look at this beauty. This is beautiful. Look at this one. I mean, look, this one here is a 3 minutes, and if we look between the 3 minutes and the 1 minute, is almost the same amount of money. Why? Because the market is trending. And when you have an instrument is not trending, it's not going to work probably on a lower time frame. Maybe it will work on a higher time frame. And if there is a volatility, also you're going to get in trouble. So what I'm trying to say is, whether you are auto trading, of course, 1 minute, there is more noises in it. 3 minutes has less noises in the market. The 5 minutes has less noises in the market as well. So what I'm saying is, you can be conservative between 3 and 5 minutes, or you can be aggressive between 1 and 2 minutes. But when the market is trending, it doesn't matter anymore, because whether you are using 1 minute, 10 seconds, or you are using 3 minutes, it's going to catch that trend. There is no way out. It's going to catch that trend. So please, 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 in the morning, before you start your auto trade, look at the market. I know it's boring. I know, but you cannot just say, well, I'm a mechanical automated trade, and this is not my problem. It is your problem. It is. $200 losing a day, that's $50,000 a year. And probably you hardly have $5,000 in your account. The majority of NinjaTrader customers, they over probably 65%, they are less than $5,000 in there, and that is expensive, for guys. When I mean, we can see it when people are I mean, we do new installations every day practically, and we see people's account is not over $5,000. And then if you are ignoring the majority, I mean, we have some people that have 250,000, 300. We have a guy over $500,000, but those are very rare. The majority is like we get people, they count how much is gonna cost the license for NinjaTrader, how much is gonna cost the auto trade, and how much is gonna, and they don't have even money to trade once they invest money in the tools. So the majority don't have this luxury to make a mistake and to be down. I mean, on my other investments, last week I was there is one day I was down $50,000 and I slept well. I have seen it before. And then the second day I was up over 50,000. So this is part of the trading, and there is nothing you can do. So when a guy has $5,000 or $10,000, this is not really money in the market, in the trading, and you cannot come in with $2,000 ignoring the signal in the market or ignoring the trend in the market, and you think your 2,000 is going to build. This is just a fairy tale, and this is a myth used by those salespeople, the car salesmen, promising that they're going to turn your $2,000 to $50,000 or $100,000. This is bull. This is a bunch of BS, and this is not going to happen. You can lose $50,000 a day, but you cannot make $50,000 a day. So what I'm saying is, please, guys, whether you want to brush me off, you like me, you don't like me, doesn't matter. If you are not, if you want to auto trade, does not matter. And here's the thing: is when you're trying to tell this to a guy, he say, "Why you're auto trade? I need to look at the chart for 5 minutes." Where the others, they don't say that. The others, they don't say that because they don't want you to know that. They just want to sell you an auto trade. There is no, and then I have a guy saying, "What's wrong with your auto trade?" There is nothing wrong with my auto trade. What's wrong with your head? You do not turn on an auto trade and not looking at the market direction. You do not turn on an auto trade. If you turn on this auto trade in this location here on the ES, if you look, listen to me. If you turn on between 42.21.50 all the way to 42.30, if you turn on your auto trade in this area, guaranteed you're going to lose your pants. You're not just going to lose your account, you're going to lose your pants. The reason is there is a certain areas on any chart, on any ES, on any YM, on any NASDAQ, you ignore where you are in the market, you're going to get whacked. If it's not today, tomorrow. If it's not tomorrow, the day after, and you're going to lose. That has been skipped, relating this information to retailer and telling him, you cannot adjust. I don't care how much you optimize. I don't care what kind of auto trade you have. If you are trading or auto trading between 42.21 on the ES all the way up to 42.29, you are going to lose money, and that is guaranteed. Whether you have $2,000, whether you are using my auto trade or some kind of banana ATR auto trade coming out of somewhere 20 years out of date, you're going to be even more in trouble with this kind of auto trade. You cannot auto trade the chart between today, between 42.29 on the ES and 42.22. You cannot auto trade that area. And you need to learn that. When you come in the morning, if you don't see the market in sequence, you cannot auto trade. You gotta wait a little bit. I'm gonna let this one here go. It's done, and I'm gonna let this one go as well. So we still have one trade. Now let me show you the two different in here between. On this one here, we are using the trailing stop. And also this one here, we are using a trailing stop. One thing a lot of traders make this mistake where they are using between 10 and 15 ticks trailing stop, which is the biggest hogwash I ever seen in the trading. You do not use a very close a trailing stop. We're gonna extend this one here a little bit further to see if it's gonna do it. If we look between that trade and that trade here, if you notice, the trailing stop is away at 42.1475, and here the trailing stop almost now the same. When you are auto trading and you're trying to catch a big trade, over $1,000 trade, if the market is trending, I'm not gonna tell you that you can catch $1,000 trade tomorrow. I cannot do that. I don't know what happened tomorrow. But if you are trying to swing trade the market, you have to use the trailing stop. At least right now we are at 42.08, and we are on the trailing stop 42.14. So you need to, and also if you want to, you can extend it. There we go, it's finished. We still have two more trades. Our daily target is 1,000, and now we got 1,250, and we still have 1,400. So the trailing stop, if you're trying to catch a swing trade, the trailing stop has to be very far from the market, and you have to suffer with it, because if you are using 10, 15 ticks of stop loss, you're not going to see no more than a couple $100 on each trade. And here's the things. I didn't have time today, but I have set up the other auto trade signal on a different computer. I will show it to you, but not today. I have set up the signal auto trade we have covered last week. Also, we have released the Monday before. And the other kind of auto trade is it's not taking left and right trades like those ones here. Here is the secret about it. When you are using 10, 15 ticks of stop loss, doesn't matter which auto trade you are using, whether it's ours or somebody else. Your average trade is around $100, $200 at the top. And what it is firing back at you. Even if you are in desperate to recover some of your losses, and you are trying to tighten up your trailing stop so you can secure more profit, is the opposite. You are hurting your account when you are doing this, because let's say you had a bad day. You are in a hole. You have a bad day. Welcome to trading. We all have experienced that. I had a bad last week, not just a day. The whole week was bad for me. And welcome. There is nothing we can do about it. And when your account is a little bit wounded, and you took a bite on your account, you should do the opposite. You should extend your trailing stop, because now you cannot afford those $200 stops. Why? Because the more your auto trade, and it does not matter where it's coming from, guys. It's not. I'm not. When I'm talking about auto trading, I'm not talking about my auto trades. I'm talking in general, because a lot of traders has been misguided about auto trading. And if you are in trouble, which any auto trade can get in trouble, any auto trade, if you're not paying attention to the market, and you might gonna have a losing day, and you need to recover this losing day, instead using a small trailing stop, now you need to use a bigger trailing stop and minimize entering the market as much as you can. The less you enter the market, the better off you are. You don't need to expose yourself to the market constantly. It's like you are sitting in a blackjack table and you're trying to win, and it's not gonna happen when you are sitting on a blackjack table. And when you are in trouble in the market, it's the opposite what you are doing, which I have seen a lot of people doing this. Now what you need to do, you need to go swing trading, and you need to slow down your trading stop, because what you need is a good trade. What it takes is one good trade to get recover from a bad day, let's say yesterday or the day before yesterday. So when the market is trending here, we can recover a little over 1,000. If the market is trending, you might cover 3,000. But when you are in trouble, you do not go on a lower time frame, and you want to be in and out of the market constantly, and you want to use the trailing stop very small with a very small stop loss. And then what happened? You're going to get chopped away, and then the market is going to come and take one small bite of your cheese, another small bite of your cheese, another small bite at your cheese. So what I'm saying is the opposite direction. Is when you are in trouble, you need to be less exposed to the market, and your trailing stop, I mean, if we want to look, that's what you are looking for in your trailing stop. What we need, something to chew on, like this one here, this trade here. On that trade, I mean, this is an earlier, this is was not, this is where we started the auto trade. But this one here for the Europeans, what you are looking for a trade like this, or a trade like this, something to chew on. When you are starving and you're hungry, you're not gonna get some kind of diet biscuit and say, okay, I'm full right now. You need a juicy steak and a baked potato. So what I'm saying is, when you are hungry, you want the ticks to recover. What you need is swing trading, and put this trailing stop a little bit away from the market, because the market is gonna go back and forth. Look at this one here as an example, this ES. If we look at this ES, the market pulled back from 42.03 all the way to 42.06, and we still trending. So if I was using 10 ticks or 15 ticks trailing stop, I would have got out. I would have entered the market at 22, and I would have got out at 20. Then the auto trade is going to take a trade right there at 42.15 somewhere, and then it's going to lose the trade with the stop loss at 42.18. Then the auto trade might gonna take a trade, and it's gonna exit out at 40. So what you do, and then if the auto trade took a trade in here, you would have exit with a stop loss. So here it is. We catch a trend, and we need to get paid for it. One of the biggest mistake a trader, when he takes trade he sell out cheap. He don't get rewarded. He don't really get rewarded. He exit cheap, and he sell out cheap, and he don't stay in there. So here is the things is, if we look at this one here, the trailing stop is away from the market and is given it room to go back and forth with one trade. As you see, one entry, 3,900. I guarantee you, the guy is scalping. He probably generate 20 trades, and he has not made $1,000 yet. I know. I've been dealing with people for 15 years, and privately another 15 years. So, one trade, catching the trend, this is your best option to do than to go ahead and tighten up the trailing stop. And there is one thing I don't like, is those dummy trailing stops. I don't like a dummy trailing stops, actually. We use here the trailing stop. We use the trailing stop to show those beginners that you can use a trailing stop. But actually, when I want it to be, I like the auto trade to break even, and for me to go between the fib lines, and I want to move. I personally like to do that. I want to move my trailing stop and stop loss to the level. But sadly, I cannot do that. Most of the guys with auto traders, I cannot even get them to push a button on the top. So I'm not asking that. But on this auto trades, we are using a trailing stop. But personally for me, I don't like to use a trailing stop. I want the auto trade to break even, and I want to decide where I wanted to trail stop my auto trade. I personally want to use my hands in there. Here is a reason. If we look at the ES, if we look at this ES, the system estimated to exit, and I should have exit because the system estimate the entry 42.21.75 and target 42.07, and it hit the target as the auto trade. But what I have done, I have expanded the target. It is a habit for me. When the market is going to my direction, what I do, I override the auto trade. This is a total different auto trade than this one here. This one here is one auto trade called TI7 for Ninja Trader 8. This one here is a signal entry. Why I do that? Because if we look at this ES, and I'm looking at this empty chart here, the ES, and this one is a 1 minute, and this one is a 1 minute. I like to control that one here based on what I'm looking at here. I don't want to shoot a blind. You don't want to shoot a blind in the market. What's going on the ES? On that signal entry, the trailing stops is based on fib, floor and fibs. So those are resistant. And look what happened. The market came in to the support area at 42.0325, pulling back to the resistance confirming at 42.0775. What does that mean? There is a good potential for this market able to break the 42.03, and I'm another ride for another $500 or $300 or $200 or $1,000. Because I don't want to stop that trade. Because I want to milk that trade till the end of it and drink the juice out of it and take the crumbs off the table, because I don't want to go jump back into the market. Because the next trade, I'm not sure, is going to go to my direction. So this is the biggest mistake traders do. What they do, they go extremely volatile, extremely aggressive, trying to get their money back from the market, not thinking, nervous, and once this market take a bite of your skin, you're finished. If you are using your motion, you're finished. and it is very hard not to use your emotion. But when you become a brain dead, like all of us, all our. One time I went to sleep, my hair was light brown, and I woke up, half of my head was white. We have seen so much action for the last 29 years that we become brainless and heartless with the trading. And when I see the ES is going down and I'm losing, I add on it. It's totally different approach than a normal guy want to auto trade with a couple thousand. We have seen so many action that there is nothing move us in the market anymore. We have seen it all. We have jumped. We have thrown computers out of the windows. I went to sleep with one color hair. I woke up in the morning with a different hair color. You name it, we have seen it. And there is nothing budge us anymore because we become numb in the market. And that does not come from a guy who was born yesterday in the trading. It's not. It will come eventually when you are making mistakes. And when you are in trouble, you start laughing about it. And then you get yourself more in trouble and you position yourself with more entries, and then you get out. We've seen it before. So what I'm saying is, when you see something like this, one biggest mistake I have noticed they do that, some of the traders, when they see the market is going to their direction, they add more contracts. Oh God, this is wrong. This is wrong. Because now if I want to short out at 42.05, and I have you screw up all your average price. You should never do that. It's the opposite. It's the opposite. You level out your price. I tell you how. Let's say if I wanted to go short on the ES, which sometimes the ES surprise me. I know this one here is a resistance and this is a re-entry. This is a resistance and this is a re-entry. As we speak right now, this is a re-entry. I will take one trade here, short. If the market going in the opposite direction, I'm not going to go and bill out of that trade with 10 ticks or 15 ticks of stop loss. This is for an amateur trading. I do differently. What I do, if the market goes the opposite direction, I'm going to position myself one more here. And I will average the price if the market go in the opposite direction. If I carry two ES, I'm talking about myself, but you should not do that if you don't know what you're doing. And the market keep going on the opposite direction. That's what I told you last week. I was heavily down because I did this. Sometimes it pays off, and sometimes you get the right slap on the face. And then what I will do, I will take one more position here or two more position here, and then I will cash out on 4 contracts. I know what I'm doing. The guy have 4,000, 5,000 cannot do that. He don't have this option to do that. He don't have the leverage to do that. He don't have the knowledge to do that, because what it is on the ES, if we are looking above the 42.21, there is no way that market is going to come and penetrate all this. And if it did, good luck. It's going to be one brutal day on your account. That's it. And you live another day to survive it. So I know this ES. Here is a short. Here is one more short. And here is one more short. And then I will get filled one contract. If the first contract goes to my direction, I will not add on it. And I have seen some traders, when the market goes onto the direction, they start adding contract. And this is what you are doing. You are ruining your average price. You do not do that. Let me simplify that for you. You buy a bag of potato for $5. and now the bag of potato is $12.50, and then you buy one more bag potato, or $13. Now you buy one bag of potato, $13. Your average price is no longer $10 because you have two bags. So if the price goes below the 11 and a half, you start losing money. But if you are buying a bag of potato for $10, and today it is $8, and you know that potato is gonna go to $12, you buy another bag of potato for $8. Now your average price is $9, and then you can exit immediately on that, and you can have more money on it. And this is what I use, my strategy. That's what I use. So I know this one here is short, as we said ahead of time. And if this trade did go to my direction, I will stay in one contract. It's irrelevant if you have $1,000, $10,000, or $100,000. Your money is no good in this market if you don't know what you're doing. So what it takes is only one contract, because I'm ready to take one more here, and I'm ready to take two more here. I will average a price somewhere around there, and I will nail it down and cash in on 4. This is if you are talking about manual trading. But you do not, which I have seen a lot of people doing this, you have $1,800 on that ES, and now it is your average price is $42.16. You want to add on it, so your average price is not going to stay on $42.16. Any pullback is going to hurt your average price. So if you're going to add one more contract short here, you're going to be somewhere around $42.12. So you are close to the price, and that is going to turn against you, which I have seen some people doing this, and I don't understand. Even a guy is teaching the traders, and I said, what the hell this guy is doing? I mean, you cannot add contract on a winning trade. Yes, sometimes you say, I wish I did go 4 contracts. Yes, I have said that many times. And if the one contract goes against me, I don't get nervous. I get happy because I'm going to get filled one more, because I can afford it. So I have a very strong positions. I don't want to get into details, but I have a very strong positions, and I'm hoping the market go against me so I can get filled again. I want to get filled more, So this is where it is the opposite direction what you are doing. So when a guy say how many contracts I can trade on an ES and I have $5,000, it depends who you are, and how you can handle the market, and how you understand the market, and how you can read the market. Your 5,000 or 10,000 is irrelevant to the market. If you don't know what you're doing, you're going to lose it. I don't care if you are auto trading or banana trading, you're going to lose it. You don't just you do not purchase any auto trade on Sunday and you go start auto trading on Monday. You will never do that. You will never do that. I mean, on this new auto trade, we released it not last Monday, yesterday, the Monday before. I'm still learning this auto trade. I'm still learning this, and we are the ones develop it, and I'm still learning this auto trade. And we have sent it out to our customers, not yesterday, the Monday before that, and I'm still learning to see what works, what kind of instruments works very fine with the precision, and what time frame it is consistent. I don't care if it make $1,400 or a 2 banana. I want to know what is the best time frame for every instrument to be consistent, and that takes time. I want to try to optimize it to see what is the best time to start the auto trade. It's not just a donkey. You ride it and you say, go make me money. Only naive people, think this way. But if you've been around the market, you don't just write the donkey and tell him, you don't write an auto trade and say, go make me money. And I'm not asking much, 2,000 a day. You don't do that. You're not gonna get it. I don't care what they say to you. They're just putting you in on some kind of night dreams. Anyway, so on this one here, if we on this one here, it is 2,500. On this one here is 3,100. So if I have a problem 2 days ago or 3 days ago, and my account was wounded, now I am on the recovery. And that's what you need to do. You do not need an auto trade. Keep trading day and night. This is not gonna happen sitting on a blackjack, because this is what we get a lot of questions. Can I auto trade 24/7? Because I only need a couple of 3,000 a day. And this is a normal customer. And then we had another customer. He wants the auto trade to transfer money from NinjaTrader to his account every night, because he's shoveling the money every day. And I said, I referred him to one of my competitors, so let him have a nightmare. You don't do that. You don't sit down in a truck and you drive it, or you don't go sell hamburgers and you start daydreaming and then you expecting it to be a reality. You don't do that. If you wanted to auto trade, you have to understand when to start, how to start, and the least trades you take in the market, the safer you are. You don't just sit down and daydream. As we expected on the ES, as what I called it, it was short. So I told you how it is my strategy. And if we took a trade here, one trade, one contract on the ES right here, I don't care if you have 1,000 or 5,000 or 50,000. I'm not going to add contracts on it and let it go. Let it go. It's only one contract. Yes, I wish I put 5 contracts. I wish I put 10 contracts. Yes. But it's always like this, So on one contract, I know, is this my direction? What I will do, I'll break even plus 1 tick. That means it's not costing me any money. And I will say, let it rotten in hell. Either that trade is going to make money, or the market is going to go back and knock me out with 1 tick. Why we do that, why I do that, I'm sharing what I do, what I think. What I do that, because I know if I force myself out of that trade, I'm going to be forcing myself back into the trade, and I'm going to expose myself. The more you expose yourself to the market, the more you are in danger, especially if you don't know what you're doing, especially if you are very much you're feeling involved in the market. And you cannot prevent that when you are new, or you cannot prevent it when you are 3-4 years old trader. You're still emotionally involved. Where when you're talking to people like us, been trading for over 20 years, we don't have any feeling. You still have feeling. We don't care. If the market goes against us, we add. You don't. So we don't use 10 ticks stop loss. You do, because you cannot afford it. You cannot add 4 contracts because you cannot afford it. So the only solution is to learn before you start auto trading when to start your auto trade. Could be 9:30, could be 9:45, could be 9:35. It depends on the market movement, not optimization from over the weekends optimization. Every day the market is different approach. Every day. Sometimes a spike at 9:25, sometimes a spike at 9:35, sometimes it spikes at 11 o'clock. And with optimization, you're not going to find out. The only time you're going to find out when you turn on NinjaTrader in the morning and you want to look the hard way, the charts, and see how this market is moving before you want to auto trade. If you don't do that, don't even bother to open an account and start trading. I guarantee you, you're not going to make it. Guaranteed. I'm not going to sit down here and put a fly in your hand and tell you you're going to be living happily after. No. I guarantee you, you will not survive in the trading if you don't do your part of the market and respect the market and look at the market movement before you start using any mechanical automated trade, whether it's from us or from somebody else. You're not going to make it until you start learning the hard way how this market moving before you start auto trade. And that is guaranteed you're going to lose. I can guarantee you, you will never make it. And that's why you see a lot of traders, they try to ignore the learning process. And here's what freaks me out. When you tell a guy you learn for free and he don't want to learn for free, when I'm saying I'm not charging anything, so there is no catch in there. And when I'm trying to tell a guy you need to learn the market for free and he still don't want to learn, honestly, I don't feel sorry for him if he loses his account, because he don't deserve to be trading. He should be selling bananas somewhere. So a guy refused to learn. He don't deserve to be feeling sorry for him at all, and because it is his fault. Any mechanical automated trade, if you are not educated enough, you'll end up in a disaster. In conjunction with the human knowledge, mechanical automated trading, you will have success. You will have consistency. I don't know if tomorrow you will make a banana or $1,000, but you will have consistency. I don't know if you're going to make $200 tomorrow or you're going to lose 200. I cannot predict the future for you, but you will have consistency. And it is education, knowledge, automated trading. I can accept that. But to just close your eye in the morning and turn on your auto trade before you had your coffee, good luck with that. You're not going to make it. I don't care where you purchased the auto trade from. For the last 15 years, we've never seen any success. Any success. We trained thousands of people the last 15 years. We have not seen any success for a guy is not educated. Whether he's auto trading or manual trading, we have not seen not even one success case. Just bull himself around the market and cut corners, and he become a successful trader. Not even one, gentleman, in 15 years, honest to God. And here it is. He get mad. And let him get mad. Let him get pissed. You don't learn, you're not going to earn. You don't learn, you're not going to earn nothing in here. You're only going to lose. So our channel is not about putting you in a dream. Our channel is to put you back to reality. Whether you like it or not, you'll find it by yourself when you lose all your money. I will be taking a break for a few minutes. I'm going to cut off the microphone, and we will cover what's going on in this market. Where is this market destination is going to? We're still going to go farther down at 41.9925, and probably from now till 12 o'clock we're going to end up at 41.94 right there. And that's why I have extended the trade. And most likely this is where by 12 o'clock we are going to be somewhere around that area here. The most important things, this ES should not go over 42.06. There is always a pullback. That's okay. There is a pullback. Once we break that area here, 42.035, we're going to go straight down to the 41.9925. Final destination 41.94. So right now the key on the ES is the 42.0325. Once we break that area here, we are going to head directly to the 41.99, and then at the end by 12 o'clock it will be 41.94. So we already planned the direction. If this market go above 42.08, there is one more possibility entry at 42.10. And if the market go above the 42.10, kiss this market goodbye. There is nothing to be made anymore on the ES. It's done. So the key on the ES is 42.0350. We need to go further down in order for us to hit the 41.99. So this is our key to the ES. As long as we know what we are doing, now we can auto trade, and we know where is our limitation on that auto trade, and we know our destination on that. So if you take any kind of auto trade, let me see if we have any opening position here. Whether you are using a 9 range, a minute, a banana chart, doesn't matter. The levels are on the minutes, they don't lie. You know, whether you are using a Renko bar, you are using a range, you are using a minute, the 1 minute does not lie. It gives you the true trend, because Ninja Trader is in minutes. It's not in those weird looking chart, line of break, tick chart, range. No. Ninja Trader is in minutes, and the only time you're gonna identify the market is when you turn on the minutes. And as we see right now, we have crossed the 42.0325. We need this bar to close. So now I know myself, I am into that trade, and I can estimate how much I will be making out of that trade, and there is a good potential to close it at $4,000. There is a good potential to start securing some of this profit if you want to override the auto trade. God forbid if we ask beginners to do that. But you can do that. You can secure some of the profit. This is what I like. I don't like to use a dummy trade and stuff. Secure some of the profit, and once this market go below the 41.99, I start tightening up the profit. You know, and I wanna ride that trade, because the reason I wanna ride that trade is not for the amount of money. No, it could be $2,000, it could be $200, it could be $20. I want to secure that trade, and I don't want to exit that trade, because I don't want to go back into the trading. I don't want to expose myself to a new trade. And this is where most of you guys dismiss. You expose yourself non-stop, and you don't understand why your performance are bad, because you are exposing yourself too much, and you don't have knowledge what you're doing. You're exposing yourself, and you think by more auto trading you're gonna be making more money, and it is the opposite. The more trading you are taking, the more losing trades you are getting, not because of the auto trade, because you are the guy is driving the auto trade, and you are dismissing what the chart is telling you, and you are dismissing what the market is telling you. And if you are dismissing the market, what is telling you, you are no good for the trading. I strongly recommend to close your Ninja Trader and go to Las Vegas. Thus, this way you can you don't give anyone a hard time, and at least you get happy, you get free drinks in Las Vegas. So now we crossed the 42.03, and now we are on different problem. It is the 41.99. So now what we are looking at the ES is going back to retest the 42.03, as we see here from the auto trading. And then if this market able to go further down, now I can take this trailing stop to this level 42.03. I can take 5 more points in there, or 2 more points, or 3 more points, and secure more profit to my benefits, and leave a gap for this market to go back and forth. So now the ES, it's not scaring me. The ES is going the opposite direction. It is normal behavior. is coming to retest. Every movement in the market has to go back and retest. When you see this market going very fast, and then you can see the market retrace and have to retest every number. So when you come into new level at 41.99, the market has to go back and retest the 42.02. It has to. It's not going to go any further until we test that the 42.03, it is right now a resistance. We need to confirm it before we can go further down. So this pullback should not scare me. This pullback is making me happy, is telling me it's been confirmed or has not been confirmed. If it has not been confirmed, now we need to take the needle and take the more profit out of this market. And if it has been confirmed, that's very good. So now we can secure some more profit. And combination of an auto trade and a human knowledge, that can build consistency. Auto trading by itself is not good enough. Human knowledge is no longer valid in 2021. We're too slow for this market to just eyeball it. Not unless if you are an old dog like me, maybe you can see it. But if you are a new trader, you're not going to be able to. I don't feel like when I put a guy 10 years training. No, I'm not going to do that, you know. So combination of an auto trade and knowledge, that will be very good. So now we are coming to this 41.93. Now we are looking, as we said. So what this market is doing is exactly what we have planned. We know, we understand what's going on in this trade, and we have $3,500 on that trade, and we know what's going on in this market. Now, two things is, now at 41.99, if this market not able to break it, you can take this needle and close it off. You can put it right there at 42.02, or if you think this market is going to go farther, probably there is a good potential to nail another. So this is a different, two gentlemen using the same auto trade, two gentlemen using the same auto trade, the same time frame, the same template. Not necessarily that will make the same amount of money every single day. No. If a guy start at 9:35 and the other guy started at 9:40, they're going to have a total different results. If a guy has knowledge and looking at the market and looking at the auto trade movement, he will have much better, 10 times the amount of this guy want to auto trade and brushing off the market what the market is telling him. This guy is a disaster. He want to fly and don't have a license. He's going to crash. A matter of time. Not today, tomorrow. But he will crash. He will crash. No question about it. So, one thing what we have done in the system here, if you look at those yellow lines, those are the dead zone. Once this market enter this area here, 41.95, there is no more short trade. This is not an overbought, oversold indication. This is where once this market starts sinking in below the yellow line here, or vice versa, we have them here as well, long and short. Once this market entered this two yellow lines, this is the time where you need to start closing position and start getting ready for reverse the market, because the market is not going to do it anymore. This is where the biggest mistakes, those amateur traders, they're going to go farther down into the trade where you are taking a reversal, and this you are doing the opposite what those amateur traders doing. Because once this market enter the 41.95, this area here, this dead zone area, is a matter of time. This market is going to turn around, and if there is a fib line, most likely it's going to turn around from the fib line. In this condition here, if you are, I don't like to reveal a lot because sometimes can confuse a trader. If I am in the trade, with the ES, and the market start coming between those two yellow lines, I will not close position on that trade here. You know, what you need to do, you go long on a micro account, 1 or 2 contracts. 1 or 2 contracts on a micro account. I don't know if it's going to turn around from 41.94 or it's going to turn around from the target 1. But if I am in a trade and I want to hedge it, I will leave my ES, my mini ES, go in short, and I will go against it with a micro account long. Because once this market enters this area here, it's a matter of time this market is going to turn around. That for sure is going to turn around. I don't know if it's going to turn around from here or here or here, but it's going to turn around once it entered those 2 yellow lines. And this is where we need to reverse this market. And once we can leave that trade, and then we can hedge this market and go long on a micro account. Guys, I'm going to take a 5 minutes break, and I'll be right back. Thank you.